In this video, traders are going to look at how to make sure your trading strategy has an edge. Stay tuned. Hey guys, a warm welcome to you. All right, so we want to know if our trading strategy has an edge or not. So this is a kind of question that is bandied about quite often. How do I know if my trading strategy has an edge? And I want to put something out there that perhaps isn't traditional way of looking at things, but it's the kind of way that I look at things, and maybe you'll consider thinking about it like this as well. So when someone says, okay, is your trading strategy has an edge? My response is this: are you buying stocks? Let's say, yeah, I'm buying some kind of blue chip stocks. Okay, well, you've got an edge already. What do you mean? Well, stocks have gone up. Historically, stocks have gone up. They've had periods of down moves, we've had periods of bear markets, but over time, buying stocks on its own has been a statistically profitable endeavor. Unless you get shaken out, you are okay. Now, is that an edge? Well, it is. Really, if you wanted to buy a stock now, the chance if you bought it now and held it for 80 years, based only on history, and that's all we can base our edge on, we are going to make money. So there's an edge. But is that any use for a swing trader? It's irrelevant, right? It's useless. Swing trader wants to hold a trade a couple of weeks, couple of days, couple of months. You know, if you're in a bear market for the last 3 years, then there's no validity to that at all. So that's one end of the scale. Another end of the scale might be, okay, for the last 10 days, the market has had a buying program hit it at 3 o'clock every single time that's continued for 20 minutes. Is that an edge to somebody who wants to trade longer term? It's irrelevant. How useful is that edge longer term? How useful is that edge if I went in and said I want to trade this for the next year? You'd get laughed out of the room, right? But that could be an edge for you from a short-term basis, because you're like, okay, well, I'll utilize knowing the fact that there could be a buying program coming at 3 o'clock. I'll add some other bits and flavors to the mix and use that to add layers of edge. So I've jumped the gun a little bit, I've given it away, but what I prefer to look at is stacking up what I call layers of edge on top of each other, and so it's starting to increase the probability that the weight is on your side. So rather than asking the question, hey, does my trading strategy have an edge? Because, you know, you can fake this, or you can fake the numbers if you know what I mean. So I could say, well, like that example, buying a stock has an edge, so I've got a statistically profitable strategy here. If I've done this, bought this, every pullback, X% pullback over the last 20 years, I'd have made £1 billion. Well, yes, but how useful is that? Not that useful. If I do the moving average crossover, I would have to have a massive drawdown. So you get the point what I'm saying. So the question we have to ask ourselves is this: what time frame are we trading on? And what do we consider an edge? So for that example of a time of day being significant, that's a pretty decent statistical edge that we know that almost on the button for the past 10 days or whatever number I gave, we've had a buying program. That could work for the next 4 or 5 days, which could be worth, you know, £10,000-20,000 to you, depending on what level you're trading. Even more, £100,000 if you're trading at a higher level. Is that a decent edge? Well, yeah, I'd say so. So first of all, we need to identify the time frame we're trading on. Okay, then we need to look and say, well, what are we doing? And I talk about stacking layers of edge because I want to align ourselves with perhaps the higher time frame. So we might say, okay, we're in an uptrend, so why don't I on a short-term basis only trade longs, because that will give me an edge, because I know that trading with the trend over time gives me an edge. So I'm adding a little slither of edge to that. And then maybe I add another caveat that says, okay, well, if I only look for longs in oversold conditions on a shorter time frame within a higher uptrend, now I'm adding more edge. So it's even better because we know that oversold conditions, pullbacks in uptrends generally will resolve and carry on higher, and we're not chasing at highs. So that's eliminated that kind of error into our trading. We're adding another layer of edge. And you can see how now we could perhaps add a price action layer of edge. We could add some sort of candlestick pattern layer. Each of these on their own are almost insignificant, apart from perhaps that, you know, buying at 3 o'clock, but they're almost insignificant, yeah, as is, you know, trading in a trend. That's fine, but if you're sitting there through a brutal 25% pull down, that's probably enough to wipe most people out of the trade. And so we want to add as many layers of edge as we can with all the things that we know work, because there are things that, and I think this is the key, guys, is that many people want to complicate things too much and say, well, it's an uptrend, I can buy it, but I get stopped out. Okay, but use that as a foundation. Say, okay, we're in a bull market now, so align yourself with the buy, whatever you're trading. It could be a bear market if you're trading a commodity. Doesn't matter. Okay, so align myself with that. So that's a 50% of the work done. And now add another layer of edge in. Okay, well, it seems to me that after a next point pullback, we've not had more than this point amount of percentage pullback. So why don't I align myself with half of that as I start to look in my direction? All this kind of stuff. Just keep it super simple. Just add different stacks of edge to it that are very simple based on what you can see in front of you. You don't have to be, kind of going and digging around and doing, crazy algorithms on it. You can just look and say, well, if I did this, yes, conditions may change. That's why you might want to go back further and see how long trends will go in this market before conditions change, etc. And again, don't overcomplicate it, but just have a foundation. And then you add in your short-term entries like your candlestick patterns, which we know work in the right conditions. They're completely useless when you're just taking every single one of them. I talked about that loads of times before, in the right conditions. And so we now start to develop a strategy and we build it on things that we know work. So we stack those layers of edge, and we never know that our trading strategy has an edge, because an edge is a bit of a fallacy, if you like, because yes, it could stop working immediately tomorrow, but all we can do is make our best judgment on historical patterns, experience of ourselves, and say, okay, well, this has got a good chance of success as long as I'm managing my risk accordingly and I'm trading it and I'm in tune with the market and I'm kind of disciplined and all the other stuff that will affect the outcome. Then that's the best we can do, guys. That's all we can do, is just trade with that and know that over time, if we're right with it, if we've got a small edge or a decent edge, we're going to start to make some money and we're going to start to increase our equity curve. So maybe reframing the question of, you can't make sure your trading strategy has an edge, but we can start to stack layers of edge up to give ourselves the best possible opportunity that a trade is going to work for us over a significant number of kind of repetitions of that specific strategy. All right, guys, take care. See you next one. Bye bye.